Ladies and gentlemen, it is time to rumble. I was a little muted there at the beginning, but we made up for it, okay? Little Bruce Banner. And we need him because people are split on this dilution decision from SoFi. Essentially, we're going to go through some of the commentary that not even bearish people have nothing really to add here. Obviously, they will say it's bad. If they're bearish, it's bad. If people are bullish, some people feel let down that this was a decision that they would not have agreed to if it was in a shareholder meeting. Okay. Now, what percentage of dilution should be considered a vote upon decision? Because if it's very small, then obviously that would be a small percentage. Now, what a terrible day to come home to. Yeah, it was red. The markets were red. But honestly, guys, like I tried to highlight a lot of my videos, that we should be focused on the long term. Today's a buying opportunity. NASDAQ down 2.2% today. S&P 500 down 1.6. This happens. We'll get to see the futures as well here. But overall, we are going to try to focus on the long-term potential of these businesses. Some people are getting excited. We can even talk about rate cuts as well for SoFi. In my opinion, this is not something to be bullish about because of, non-farm payrolls that ended up coming out that actually determined that, there is a very, very big need in order to cut. So that's a very big decision than just cutting for inflation purposes. But the need for the Federal Reserve to cut now is so unbelievably high that in the last day, we essentially went from I think it was a 20 or so % chance of cutting to now nearly being at 90%, 89.8% chance of a 25 basis point chance of cutting. And what I actually think that you'll end up seeing over the next little bit is a percentage starting to grow for a 50 basis point cut. Not a large percent, but it could definitely happen. I do think that we are going to get a rate cut in September. That's been a long-term goalpost that has been set, but yeah. Anywho, in terms of SoFi, so that whenever I bring up the potential for rate cuts, yes, that's good for SoFi's loan book, but it's not good for their existing book if it means that people are potentially losing jobs, not getting new jobs, and that could lead to default. So not necessarily a positive sign all around. Important to understand that. Not so. Okay. The reason why I say that it's not so bullish for SoFi is why are those rate cuts coming? Okay. That's sort of the problem. Now, in terms of the rate cut or the drama around this dilution, as we know, SoFi raised about $1.5 to $1.7 billion. Okay, we'll know about the additional 10% after the 30 days. But so far, the deal has actually been closed, and SoFi said that they will be willing to use this money for either debt paydown, accelerate their loans, or a potential acquisition. In my opinion, it's going to be all three. Okay, they're going to do a potentially small acquisition. Hopefully, this would be my hope. Like what Robinhood does a lot of the times, they'll buy a small company that is large enough that they have a product that is successful. $200 million buyout, something like this, is a sweet spot for Robinhood. If you look at, Trade PMR or Bitstamp, X1, WonderFi, they've all been in similar price ranges of around that 200 to 400-ish $1 million range, if I remember correctly. The only one that I don't remember was Trade PMR, but Bitstamp was 200, WonderFi was a little over 200, X1 was 200, or even 150, something along those lines. But it's just good enough where they have the technology and they can bring it to their existing customers. SoFi would love to do that with some sort of a crypto business, bring it quickly to market, be able to set up, stable coins and payment tools for additional companies through Galileo. Not only that, also be able to try to build out the tools that allow them to tokenize their loans and offer private credit in a fractional way to individual investors. I think that that's very interesting what they want to get into. That also allows them to turn around their books even faster and then continue to go out to market with better and better loans as well. Now, let's do a little poll, and I want people to be honest here because obviously there is a split. Do you like the dilution from SoFi? I'm going to add in recent dilution. Do you like the recent dilution from SoFi? And I always word my polls wrong, so I apologize. But if you are an avid viewer of the content that I put out, you're probably going to be a little bit biased to the fact that I actually am in support of this. And Aaron sort of hit it on the head, right? That I'm actually deferring to someone who has been in capital markets nearly their whole life. Someone who is, sort of a very good in this space. But yeah, we're already seeing about 35% of you guys saying no. No way, only if it's an acquisition. Yeah, most likely it's not going to be for one large acquisition. No one likes dilution. It's whether or not you think that it was worth it in order to dilute us as shareholders, make us essentially lose 8% of our voting right or our stake in the business for something else in return later down the line for a $1.7 billion cash stack. Crossroads wasn't. Yeah, no, he wasn't. In fact, I should send him a message to see if he is available because I'd love to hear his thoughts on it. But essentially, the way that I think of it is that I'll bring this up. Alejandro, who's a smart guy, I really like Alejandro. He said, I absolutely hate what SoFi management did with the dilution event. Atrociously bad, but selling here is not wise. Atrociously bad. Okay. There's a lot of people that are okay with it. I know that there was a post that was made. I think it was this one. I have absolutely no issue with SoFi and what they did. Selling their stock was never an option. And then he said, there's weird people out there who love this dilution and being dumped on. I saw a similar reaction when Elon dumped $60 billion worth of Tesla on folks and people defended him. And then, this individual, Dino, said, being dumped on, they're using this money to refinance debt at a lower cost and having more capital to increase lending. Thankfully, added my video in there. But he said, the people who bought SoFi or 8% of SoFi can eventually dump those millions of shares on our head. This is a very basic concept. Now, I had to step in. I said, I appreciate you not agreeing with the move for SoFi. That's perfectly fine. However, what do you mean by them dumping these shares on our heads? Because any investor can dump shares. I mean, Noto could sell his stock. Large activist investors or hedge funds or ETFs can dump share. If Cathie Wood wants to dump, which was actually, I think, the one that I used as an example here. I said, any investor at any time can sell their shares. Cathie Wood is actively buying and may sell later. That's the exact same thing. There's just 8% new shares outstanding. It's not like a pump ready to go off in order to dump 8% shares. The dilution has already happened, okay? So that part is true. Alejandro then said, Cathie Wood buying or selling SoFi doesn't magically make us lose 8% of the company. It's baffling to me how many of y'all are still comfortable with this level of dilution, specifically after the $750 million convertible note last month or last March. Will they increase EPS? I damn sure hope so, but it's unknown. And then I said, well, Cathie Wood buying $1.7 billion worth of SoFi, or Cathie Wood buying a lot of SoFi doesn't end up giving SoFi that direct money. So this is different. Okay. However, they've already been clear about them wanting to pay off some level of high cost debt. There's zero execution to that. They could immediately sell or save $80 to $90 million a year, and that would be accretive to their bottom line. I've already shown this off in my last video, but just in case anyone has any questions, like the math is actually pretty simple. All you need to do is add in the new shares and then subtract off what they could, better themselves on their high cost of debt. And not only that, but I actually affirm that with people that are in this market. So, yeah. Anyway, I will pull that up here in a second. But yeah, I think people are very worried about this move when really, if we take a look back on the historical time frame of SoFi from when they were public to now, what move have you disagreed with on them potentially letting us down every single quarter that they've done triple beats? So do we really think that they're diluting for the sake of nothing, that they just need 1.5 billion more dollars? Even Brad Freeman said, we need a heck load of money to sort of grow in the home loan space. This could just be to expand and gain access to one of the largest lending markets in the world, the U.S. Home loan market. Now, what's funny about that is that they might start to do that to get more data in the home loan market, which then opens us up into a loan platform business. A loan platform business on home loans could be the biggest product that SoFi has ever released, ever, of all time. So will we need to continuously dilute every single time to gather more capital to accelerate our growth? Well, two schools of thought. One, probably not, because we will end up going to more asset light or like capital light products that end up growing our revenue in those areas, which we have seen that's now up to 44% of their overall revenue and expected to grow continuously. And then two, what you're also going to see is that if every single time that they dilute, it's EPS accretive, the price in the stock will accelerate faster than your share of the company will dilute. Okay. That's why earnings per share and everything done on a per share basis is done. This is why we break things down into price to earnings and earnings per share and everything along these lines. So then we understand after dilution what or how well the company is performing. So I don't care if they dilute me by 99% if it means that they expand the company by 1,000,000%. I'm still going to make a fortune. So it's all adjusted to a per share basis. That's why things are looked at as EPS neutral, EPS accretive, or dilutive. Now let's see here. Now another thing that Alejandro said is that if we dilute by 8%, now it doesn't mean much, but it will mean a lot more whenever we're $50 a share. That dilution before would have meant a lot later on. But how do you get to that growth rate? How do you change the price of the stock from here to there? Well, maybe you need to hold up a large percentage of growth, increase your margins, something like this. So if they feel like there's an accretive way to get there faster by diluting some to increase even faster, then it still works regardless of what price the stock is. Why was he so sneaky about it? What is he supposed to do? Hey guys, go ahead and dump the stock before we end up doing this capital raise, so then we have to dilute more. No, you want to do it whenever the stock is high, so then you have to sell less of your shares. If the stock was at $10 a share and they needed to raise $1.5 billion, then they would need to have sold double the amount of shares, meaning 16% dilution. Well, are they supposed to announce like, by the way, we're going after this Galileo customer that's a previous customer of Visa's. So Visa, we're just letting you know we're on our way. Like, No, I mean there's some strategy here that they need to employ. I don't know if you guys have read through the analyst reports. There's not a single analyst that cares about this dilution at all. It's only retail. Like, if you guys take a look at the analyst price updates for this here, wait, SoFi analyst forecasts. Look what's happened recently. Redburn here is not a ranked analyst, I guess, but $20.50. Dan Dolev raised his price target from 20 to 26, 14 to 21. I don't care about this AI thing. 11 to 13. So this is a bearish person, but he still increased his price. 13, that kept flat. So that's another one of the bears. $25, 18 to 21. And then 21 to 22, 13 to 15. These were all post earnings. And Andrew Jeffrey actually has a price target of 37, I think. I think he's the market leader right now, except it only shows it in his report, as well as Devin Ryan, who has a $25 price target, but that's only in his report as well. They said they're going to do a price update eventually, just not yet, as well as John Hecht doing $27. So overall, the market is happy with this report. And a lot of these reports were after that they knew that the dilution had happened, you know? So there's still people that think that, there's a bank valuation problem, that they should be or they should be valued at 1 times price to book value or 1.5 times, and that's going to be around for SoFi for a while because they are a bank. So breaking that stigma is going to stop some analysts from putting them to a better price target. But even Tesla has those types of things. This is a car company. This is the most expensive car company in the world. Yada yada yada. That other analysts will be massively separated from where they are. Same thing with Palantir. This is a software business. You can't value software like this. And then you have other price targets that are coming in at 1 trillion. There will be people that think that SoFi should be valued like a bank. And then there will be other analysts that say, hey, you know what? We should honestly be looking at the KPIs here. They're skyrocketing. There's no other bank growing revenue at 44%. The day that they want to turn on the margin engine here, I mean, that happens overnight. So same thing with Amazon, right? Like, Amazon is not making a lot of free cash flow right now, but the revenue is going in the right direction. They make like the most revenue that any public company makes. Well, I think actually Walmart makes a little bit more than Amazon right now, but I don't think that'll be the case next year or the year after, something along these lines. Anyway, their margins are actually pretty tight because they continue to reinvest constantly. The day that they don't want to, their free cash flow would skyrocket if they decided to not expand to more and more warehouses and buy more data centers, But Amazon's one of the largest startups in the world. I mean, the largest startup in the world, and they continue to try to capture new markets, try new things. And those are the companies that I like. I'm going to continue to bet on Amazon. I'm going to continue to bet on, what's it called? SoFi. So let's also look at that too. If we go ahead, I also saw Alejandro's comments, and like I said, I'm not trying to pick apart Alejandro. I actually really like the guy. He's awesome. But one of the things that he had brought up was that if you look at JPMorgan's shares over time, that they're decreasing. If you look at SoFi's, they're increasing. And it makes that, every quarter, the shares that you have at JPMorgan are worth more of the business. And if they continue to grow, it's just additive to the stock price. SoFi's is dilutive in the business. So, which I get. I mean, I'm not new to the idea of dilution. I don't even think he was speaking to me whenever he said that comment. But if you take a look here, he wants, SoFi to also do buybacks. Oh, sorry, dropped my phone. Okay. Fast growing companies like Palantir and Hood are already issuing buybacks, so SoFi should be able to do that as well. A little bit different of a situation. SoFi also uses their capital to, um, lend out money and actually accelerates their growth rate. So it's part of the business. But businesses that are doing buybacks haven't been doing buybacks their whole time. I mean, look at Robinhood, for example. Their total shares outstanding had accelerated before they started doing buybacks. Palantir, exact same thing. And it's still a problem. They're just trying to buy back shares. You pull up a Meta, for example, and their shares were increasing very dramatically whenever they first went public, to only then start to decrease as they've scaled. Let's see another one. Apple is a good one. If we take a look at total outstanding shares, we just drag this all the way back. They used to increase on their total shares as they were in complete growth mode from 2005 to 2012. And then after that, then they started to buy back shares as they became a more mature business. I mean, these are very easy concepts, is that companies, whenever they have tons of ideas, do not buy back shares. They have new markets to go after. And then whenever they're cemented in those markets, then they buy back shares. Okay. So the more money that you have to go after new ideas, the less money you have to go out and buy your own stock. It's not like SoFi has an unlimited amount of capital to make every decision. I mean, if that were the case, I would want SoFi to do dividends, buy back stock, grow lending, acquire businesses, do all of that all at the exact same time. It's not the way it works. So right now, they need to decide if they are cemented at this valuation, or if you think that they could potentially enter new markets or speed up the rate in which they are entering the markets that they're currently entering. Right? That's what Noto has essentially said, is that, hey, you know what? We're running, but we could run a lot faster if we had a lot more capital. It's not a bad thing. Dilution for acquisition is normally good for businesses. So honestly, I'll say that the dilution to increase your lending efforts, dilution to do debt pay down, I know that people are less excited about that, but those are actually the two easiest options. Those ones are guaranteed to be good, or at least the for debt pay down, that one is just, that's simple dollars and cents. Okay, that one is so easy to understand. Acquisition can go wrong. Okay, you can end up overpaying. You can end up actually making that capital worse off than it would have just been sitting in cash. And to be honest, that was the case for Galileo and Technisys. Not saying that they didn't do good things with those businesses, but they overpaid for them. And you know that because they wrote off some of the goodwill as well. Now, to be fair, I think that SoFi is a great business with Galileo and Technisys, but there's a price to be paid for everything. There could be a really, really great acquisition that SoFi ends up getting, but it's not guaranteed. A debt paydown or an acceleration of lending is like almost a guarantee that they will do better with that money than what they would have done without it. Y'all are getting diluted harder. Well, you know what? People can point to the dilution and say, "Oh my gosh, it's you're getting diluted like crazy." But that part doesn't matter. Whenever you're buying a business, the part that you have to focus on is what is the stock price doing? Okay, and over this last little bit, we've gone from $7 a share, and as dilution has accelerated, we've gone from 7 to 21. So it really doesn't matter. My shares are worth less of the business if I held the exact same amount, yet I'm triple my money. That would be a bank acting like a bank, not exciting. Guys, SoFi, a large majority of their earnings is through lending. Okay. The way that they end up scaling up a product is that they need to lend out those products and take the risks themselves. And then they learn that product so well that they end up doing it for others. SoFi would feel very comfortable doing personal loan lending for themselves and student loan lending personal loan lending for themselves and others, and student loan lending for themselves and others. That's my belief. They're the largest player in that space. However, home loans is their biggest opportunity. Talk about an acquisition. I mean, they literally went out and purchased Wyndham Capital, an amazingly priced good deal. We know that they want to enter this space. It's a multi-trillion-dollar industry, like absolutely huge. Okay. If they can get that right, then they can end up getting into the loan platform business. It's not about what's exciting or what's not exciting. It's about what is going to return the highest amount of shareholder value and increase the stock price. You know, SoFi is a bank, or they have a bank. Like, they have to do some banking things. With this administration, student loans will be huge as well. Yeah, I mean, they definitely could. They definitely could. They're well placed for it, but I don't think they need additional capital for student loans. We also have to remember like how much capital goes into a home loan. They're by far the largest capital requirement out of all the lending products that they have. SoFi did the same dilution last year, and I still don't know the reason behind it. The question now is, will they try to do the same thing next year? You're completely incorrect. They did a converted note last time, and that was to replace old debts before. It's a little bit different than what they're doing here. They're just selling common stock. And if they end up doing that, like the problem with converted notes is that there still is a requirement to pay back something. Here, they're not paying back anything. There's no cost, it's just shares for dollars. So they don't really have to replace that. Now, we still have a 2029 convertible note, but they did that because the costs were really low. Where would the stock price be now without dilution? Way higher. Well, that's assuming that the market would want it to be way higher without that dilution. The stock, whenever they showed off the dilution, should have brought the stock down 8%, but it didn't. People actually sort of swallowed that deal and we're pretty happy with it. So, yeah. And plus, you don't know how they're going to accelerate into the future, So it's not just about the stock price today. Like whenever you're talking about buying a good business, you don't want them to just like SoFi can maximize profits for one single year. Where would the stock price be if Amazon ended up to issue buybacks, issue a dividend, stop capital expenditures, and put it all into EPS? Their margin would skyrocket. Investors would go, over the moon. But then a decade out, they wouldn't have the technology to stay competitive because, Microsoft Azure would have grown faster. Google Cloud would have grown faster. They would have been completely supply constrained. So a lot of the expenses that businesses have are not for the current moment. It's for years into the future. So SoFi is preparing itself for, listen to the commentary that Anthony Noto was talking about during the call. He was speaking in decades. Okay. So that is what we also have to think for Noto as well. It's like, man, when has this guy, steered us wrong here? When? We've beaten expectations every single quarter, and EPS for SoFi at the end or right before we just saw this quarter was 28 cents. Okay. Then SoFi ended up raising their EPS guidance to 31 cents for the year. And honestly, before this year even started, I thought we were going to come in at 38 cents. Now it's 34 cents. Now I think it's 38 cents. If I'm getting diluted, that should bring the stock down. Why is the EPS higher? If stocks trade on a multiple of earnings, the stock should be higher now than, pre-dilution. So it's very important to look at EPS. People have this scary thought about dilution as if, oh, we have less of the company now. It's like, yeah, but if it's growing, like if they dilute you by 8% and it grows by 15, you have more of a better, or you have less of a way better business, which is accretive in total. You have to add them both together, not just the equity, but the quality of the equity. Noto needs to be sued. Lying to investors on national TV was a scumbag move. Go ahead and sue him. That's your prerogative. But it wasn't even public information. And he wasn't allowed to talk about it. Yeah, I mean, not well. I see your point. It's not really the same because there's not like one individual asset that they're looking for. But it could be, diluting to buy something that's worth more than your equity. That's MicroStrategy's product. SoFi, it's not as clear that the debt that they're going to pay down or the loans that they'll end up replacing will be as clear to investors as, let's say, Bitcoin, for example. And if you're saying, hey, I'd rather have loans than Bitcoin, then you aren't a shareholder of MicroStrategy anyway, then. Why does Noto need to care? I don't think he cares about people writing comments on X complaining. He's doing meetings with Wall Street analysts, trying to make sure that their answers are, A-okay, and that's fine. And they put out a press release on SoFi Investor Relations Twitter to try to clear up confusion. What they need to give us is transparency. They don't need to calm our like if they tell us exactly what they're using this money for, and then we go, hey, that's not good enough. Well, all right, like we can't change your mind on that, but this is what we're using the money for. Do you think Noto runs covered calls on his SoFi? I'm not sure, actually. That's funny. But the truth is that SoFi, like, if Anthony Noto was doing poorly to SoFi stock and you think that it's going down from a position of strength, okay, so he doesn't have to do anything, okay? Take a look at the actual ownership of this business. Anthony J. Noto is at the top of the frickin' list. Okay. He's got 10.1 million shares, nearly 1% of the company at a market value of $150 million. I don't know if you guys have $150 million in SoFi. I sure don't. But this man is diluting himself way more than he's diluting you and I. Okay. He has the most to lose. And yet he still did that. All of these members on the board that have, $4 million, $3 million, $9 million, $10 million, 12, 13, 15, 21, 22, all agreed upon this deal to dilute themselves in order to push the business forward because they think that it's going to return positively in the form of higher EPS, which is going to push the stock higher. Should I sell AMD and go all in on SoFi? If you think that the fintech market that SoFi could potentially capture is larger than the chip market that AMD could capture, maybe, but I can't make that decision for you. I think AMD is a strong name as well, but it's up to you. You're your own shareholder, or you're your own investor. So until someone with $150+ million in SoFi comes and says, hey, I've got a problem with this dilution, that's all right. You're babysitting. Well, I do think that there wouldn't be a whole lot of people that were here if it was me just telling you what the market had said. Anyone has the ability to go and read news and, take in the information from an investor relations page. However, I do try to calm nerves whenever people worry about large moves that they think, companies are suiciding their business here. I mean, I don't think that's what's happening. Okay. And that's all I'm trying to clarify. Now, we do actually have a lot of news today. Or at least a decent amount of news over the last little bit. Alan Pawlowski, who actually used to work under Anthony Noto, said, Anthony Noto, I'd love to see SoFi lean into baby savings account provisions on the One Big Beautiful Bill that gives newborns $1,000 tax deferred when they issue a social security number. Position SoFi as the first financial partner in a newborn's life in a lifelong guide for both parents and children to get their money right from day one. Then he literally says, launch a baby academy, partner with pediatricians and hospitals to include SoFi baby account onboarding material, in-app guide journeys for parents, SoFi for kids, offer a parent dashboard, SoFi milestone plan, the whole 9 yards. I think it's actually amazingly written. Okay. And Anthony said, hey, these are all great ideas and something that we are looking into. So, little SoFi baby here. Maybe youth accounts, which we've already known that they've been pretty interested in, that we've already been pretty interested in learning more about, like in job postings and stuff. They've said that they want help creating youth accounts. I think that maybe we might actually see something along those lines being pushed out a little bit sooner. Especially the fact that he replied to it. Obviously, he could have taken all the, ideas from that, brought it to the team. The fact that he replied to it pretty quickly actually makes me think that it will be rolled out soon. Why is Nubank stock down? Because of tariffs? Yeah, tariffs, tensions between Brazil and the United States, stuff like that. Let the babies YOLO 0 DTE options. They got to learn early. Damn straight. Should we buy now or wait a bit considering the historical trends of August, September period? What is your suggestion on creating a new position on SoFi, please? My timing for markets is never great. Not meaning that every single time that I purchase it goes down. It's just probably at a 50% success rate. Obviously, there are some trends about August, September, maybe even a little bit in October, but I've never been too good at timing it. What I like to do is DCA into these positions. If it's a first buy, usually I make that a little bit different of a lump sum, usually much larger than what I would buy over the course of the next weeks. But it's really up to if you think that this is a cheap valuation. If you're hoping for more, I don't really have much to give you in terms of where I think that the markets will go, unfortunately. But I don't have next week predictions on stock prices. There are traders, but I'm not a very good one. I'm more of a long-term hold, buy and hold type guy. Trump just said that Powell should resign with the Fed governor. Yeah, I bet. I believe it. I think that also furthers the fact that I think we're going to get a rate cut in September. GLTA, thank you, Tanner. Let me check. GLTA. 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 It's not even a ticker that shows up on my list. What is this? Unless you're trying to say GTLA? No. Oh, just good luck to all. Oh. I've never heard of that. That's hilarious. So in this channel, we have a fund, a community portfolio. It's not a fund. It's more of a portfolio. It's my portfolio, but it is funded by donations in chat. So usually whenever we see a donation, I see a ticker symbol and then someone saying, hey, you know what? Thank you so much, whatever. But here is the ticker symbol that I want you to put that money towards. Is there a ticker that you want me to put that money towards? Because I'm just so used to that. Good luck to all. I've never even heard that. By the way, our community fund, I can pull that up really quick. It is not doing well. We're down 14%. Today was a bloodbath. SBET is just, it's getting demolished. We're down 54%. SoFi is down after today. We're down 14.75% since starting this in June 8th. Okay. You guys just buy too many memes. Too many memes. Also, we started it during the best month ever. So it's probably going to look more red during this, next month or so, if things continue to get worse. Reddit up 17%. Whoever picked that, I mean, whew. Thank you there. Big Bear AI, Mercado Libre. Wait, is this today or let's go to total? Sorry. ASTS, Norwegian Cruise Lines, Cloudflare, Nebius, Marvell, Hims, Neo, Shopify, Nvidia, Kraft Heinz. We've got a couple green names in here, but for the most part, it is a red bloodbath. Joby up 47%. Damn. That's a big one. Yeah. So appreciate your guys' donations. The donations are great, but they're falling over time. This frickin' chat and their picks, eh? Their chat and their picks. Lemonade will do well, given rate cuts might happen later in the year. Yeah, well, that's the thing, right? Is the positions are for 1 year. I am a patient investor, so I'm not really worried about it. But I do know that some of these names that people have picked are also crap that was working because we were in a frothy market. I mean, we still are. It was 1 day of red. But if we continue to be red over time, which I'm not going to make any changes in my actual portfolio to try to adjust for that. I have, income funds that I can rotate out of and then put them more towards equities that have, fallen a lot that I think are fundamentally strong. Okay. I'll be here every day, talk about what I'm doing and, see if we actually do need to sell some positions if they're like severely hurt. Like if SoFi says that, the job markets are actually affecting their personal loans and they're going to show a miss on something like this. Nubank, issues with the United States and Brazil get so bad that it's just dead money for the next 4 years. I might sell that just to rotate out into names that are working. But like we stay on top of that, right? Like I love Nubank, but if conflicts, like things that we can't predict happening, continue to escalate, I mean, we have to act a little bit reactive there. But overall, I think that the company is perfectly fine. Rodrigo says, question, if SoFi acquires a crypto company, would that allow them to circumvent the restrictions SoFi has a bank? Yes. Circumvent the restrictions? That's the only part to the question that I'm a little bit confused on. But yes, banks have a lot of clarity for getting into cryptocurrency. There's no more real restriction for them since a lot of the new acts that have been placed. So Gary Gensler stepped away. and what's his name? Paul Allen. Is it what's the chairman in the SEC? Paul Atkins, sorry. GLTA is a good ticker. Yeah, I mean, I'm just so used to tickers popping up on donations. It just didn't even click, nor have I even seen that one, to be honest. But yeah. Let's see here. MicroStrategy. Oh, yeah. We have August 7th, potentially Paramount stepping down from the S&P 500 due to an acquisition. And then we end up getting a new name that ends up popping in. Is that going to be AppLovin? Is that going to be Robinhood? Is that going to... I don't know. I don't know what other names are on the list anymore. I'm so lost after Block and William Sonoma. Whatever. Okay. Will the market keep dumping next week? I think it really depends on what ends up happening next week. The market's really good at taking in bad news. The market's not good at having uncertainty. If the market is very clear that we are going to get rate cuts, that'll be some smoothing out. Make sure that there's no, new war issues that end up getting started or something. Like, it'll depend on the news as it's coming in. So it's hard for me to make bets on that. Are we acquiring Hood? Hood is, if you mean SoFi or if we're buying Robinhood, SoFi's not buying Hood. If we're buying Hood, I mean, I'm not buying at the $100 range, but boy, oh boy, could I be convinced if they drop a good amount on a scared market. Glad this week is finally over. I mean, for the most part, it was good. It was just this at the very end. And Fig is down 5%. Yeah, but come on. How high can we get this? It IPO'd at freaking $33 or $32 a share. Like, let's get real. Yeah, we're not, honestly, we couldn't get Robinhood for $200 billion right now. They're not even at the whims of being acquired anymore. I don't think anyone is going to touch them. I think the companies that could pay for them don't want to pay for that business and probably consider them to be overpriced and don't understand the benefits that they have in terms of the speed in which they put out new products. And the companies that do understand that can't afford them. Meta 1200 in 2026. By end of 2026, honestly, I mean, like, I wouldn't even count it out. They are growing like a weed right now. And if artificial intelligence does anything along the lines of what Mark Zuckerberg is hoping for, the amount of value creation that will come from that will be faster than anyone. Like the revenue growth rates and the new productivity gains that people end up seeing will be faster than anyone is end up putting in. So yeah. Let's see here. What is the end of year target for SoFi? Bull and bear case. Thank you. Bull and bear case for SoFi. The bull case is over $30 by end of year. Like $35 or something like that. I would think that would be pretty bullish. A bear case is that we fall back into the teens because the market's worried about SoFi's balance sheet defaulting, or that the appetite for purchasing new loans dries up. So I'd probably put it on a range of like 12 to 35. Like bull and bearish, even end of year, like a lot of things can change. Yeah. Overall, I don't try to buy companies for what's going to happen between now and December 31st. What is the bull bear for 10 years out? Or not even bull bear. I'm not betting on them doing poorly, right? Like things can go terribly wrong. Like we could lose the CEO, we could a lot of bad things could end up happening. However, the long term is that we that we just continue to execute, and that the market actually gives us the multiple that we expect it to. No one is going to sell off the Mag 7 again and make the same liberation mistake. It's not true. They absolutely will. The thing is that the market didn't sell it off because they think that Apple was going to lose all their business or something. I think some of it is just there's high frequency traders. There are massive amounts of leverage in markets that some people, although they see value in a certain name, they can't hold through bad times because they'll get liquidated. So you're still going to see massive sell-offs. It's not like everyone's just become a long-term investor because of Liberation Day. The markets have gone on for a long period of time, over 100 years of people way overselling and way overbuying things constantly. It's never going to change. Chat is the star of the show. We need to get back to some news. Sorry. Coinbase, although they didn't end up putting in a lot of great numbers that investors wanted to see, they ended up bringing in new ways to end up buying crypto through Samsung Pay. So this might actually accelerate the adoption of cryptocurrency, especially now that it's starting to get a lot more clarity in the White House. So that's very exciting. But better than that, we saw maybe the largest new change for Coinbase, which is partnering with one of the largest banks. Okay. Partnering with one of the largest banks to onboard onto cryptocurrency is just crazy. We're partnering with JPMorgan Chase to offer 3 new ways that their 80 plus million customers can participate in crypto with Coinbase. The ability to transfer Chase Ultimate Rewards to USDC, the ability to use Chase credit cards to fund your Coinbase account, and the new direct bank integrations. A lot of the times before, those banks would simply cut off the ability to put money into cryptocurrency, and they'd say that it's some form of a scam or something along these lines. Whenever they knew that it wasn't, but they didn't want you to go over to crypto and lower their deposits within those banks. But if they can also get paid and it's sort of their actual right to do that, then it's hard to stop them. By the way, you know what's crazy is this right here. This is the bull case for SoFi. I heard changing for open banking data changes this. However, it doesn't. Chase is just greedy on both ends, charging payment companies for free data and then also saying, hey, you know what? We've given a lot away, but we still want more. The monthly service fee for your Chase total checking account ending in blank will increase from $12 to $15. With $15 a month, guys, you could buy SoFi Plus and a Robinhood Gold subscription and get the best of both of those fintech, companies. You get cash delivered to you directly. You could have, 4% APYs. You could use amazing, costs of home loans and personal loans and all of these added benefits on what a JPMorgan maintenance fee will charge you to your account. Wow. That is why, I think SoFi and these other fintechs that we cover is going to win. I mean, like everyone goes, oh, like even Devin Ryan said the other day, like all these banks are trying to win in consumer. Are they? Are they really? Who's happy with that? Chase needs that extra $3. How much tech debt do they have that, the costs of, keeping a customer, not even writing a new customer, keeping a customer on your platform costs you $15 a month. Get out of here. Fee-free overdraft? Yeah, try looking at all the other fintechs that offer that with no account balances. Like, so JPMorgan, great business. Chase for consumers, especially smaller end consumers, they are not trying to win your business. And they'd probably be pretty adamant or pretty open about that just because the money's not there for them. But if SoFi can start to offer those people who have been potentially underserved in certain areas and start to win them over, then they can start to actually make some money and then use that capital to then offer products to customers that they didn't, that had options. That's how fintech gets started. You need to find one area where the incumbents have made a mistake, and then you just branch out and expand that tunnel. And then at the, before you know it, the entire mountain comes crumbling down because you've chipped away at the bottom the whole time. Little crack, no one really cares. But once you start running tunnels through it, whew. Chase has a branch on every block in Manhattan. That's expensive real estate. It is. I don't think other banks dilute their shareholders. Yeah, well, I mean, they don't have any potential growth opportunities. So they just use their capital to, buy back their own stock because they don't see a massive runway of potential products to go after. They're trying to capitalize on easy wins. Buying back your stock is easy. Going after something new is hard. That's always what large companies do, though. They get old, management becomes, non-founders. The management cares less or cares more about not killing the thing that they're running than actually trying to grow it. And so they run with massive risk tolerance, or like not risk tolerance, sorry, like risk adversity. They're worried about risk. In a favorable macro environment, SoFi 5 to 10 year price target amid Anthony Noto stating 25% growth annually for decades. Thank you. I'm not sure. I'd have to model it out. It's too far out, but I mean, you could do it pretty easily. Take a look at what they're doing right now. If you're suggesting that they're growing 25%, look at what that does on a 25% compounded annual growth rate over that period. Apply a regular multiple of what you're seeing in the markets. Yeah. Assume some level of regular margin or potentially even better of what Anthony Noto has said, like, net income margins of 20 to 25%, adjusted EBITDA margin of 30 to 40%. And then add that multiple. But I'm not going to do that live on the show, but thank you. I have done those before. There are videos where I've done, SoFi to 2030, stuff like that. You can see my price targets on SoFi from that video. I think I don't remember what it was. In the ranges of, I think it was like 45 to 80, something like that for 2030 or 85. I forget. Everyone forgets Trump hired Powell. No, I mean, he talked about that today. He just said it was a mistake. I don't think anyone forgets. It's just, he talks about it. What's your thoughts on PayPal? Are you buying again if it goes to 58.60? I mean, that would be some incredible pricing. What are they at right now? 67? Yeah. Like, if they went into the 50s again, I think I would have to. Their buybacks are just large enough as it is. With the Braintree sell-off that we're seeing, I mean, Braintree sell-off. The Braintree slowdown in revenue because they're trying to charge more. So transaction margin dollars, they're actually accretive, but on the actual revenue, they're much, much slower than what we've seen previously. Once that's over with, branded checkout and Venmo will be able to carry a lot of growth here. And yeah, it would be very hard for me not to hold shares of a business that I think that the CEO is extremely competent, re-energizing the business, trying to be forward-looking, and is buying back like 10+% of the outstanding shares each and every year. That alone should get you to to beat the market on its own, let alone if they can add anything additionally to that growth. Let's see here. All I know is that SoFi has gone up 200% in 1 year. Yeah, but that doesn't mean that it's going to continue at that rate. A lot of that was multiple expansion, not actually performance-based, expansion. Although Wall Street has increased their or like what they're expecting for full year 2025, it's not necessarily that much different. It's just people saying, "Oh wow, they're actually going to do it." There was a lot of belief that what Noto had said they were going to do was not actually what they were going to do. Yeah, right now for full year of 2025, they've changed the average EPS from 28 cents to 30. That's for full year 2025. SoFi has come out and said they want to do 31. I say they're going to do 38. If they do 38, we are going a lot higher. But it doesn't mean that we run another 200%. I hope that we continue to run, but it'll be at a different pace, I would believe. PayPal should rebrand to Venmo. I think PayPal is honestly a pretty strong name. The whole world knows PayPal. A very small percentage of the world knows what Venmo is. People have to remember, the whole world knows PayPal. There's a lot of customers in China that use PayPal. There's 0 of them that use Venmo. Been holding PayPal for years. My average is 62. Been dead money for some time. Yeah, it doesn't mean that it's going to be the case forever. I'm focused on what they're actually doing, and I like what they're doing. So I don't know. I think that they do have some tailwinds, but those will be going away. If I go ahead and take a look at PayPal here really quick. We just take a look at total outstanding shares. Yeah, this is just ridiculous. Yep. Can I share my screen? This is PayPal's outstanding shares. Maybe I can... no, that doesn't make it any better. They have just bought back shares over and over and over. And then in the last couple of years, it's just been incredible. Lowering outstanding shares by 22%. Unreal. Well, still expanding revenue. It's still growing. Okay. Gross profit is going up. The margins are staying high. I don't think that this company disappears anytime soon. The price to earnings right now come on. It's significantly cheap right now. 14 times price to earnings ratio. On a forward basis, it's not going to be too much different. But it is a 12 times. By 2027, it's a 10 times price to forward earnings ratio. And then a forward price to free cash flow of 9 times. This is a cheap business. Cheap business. Do you think Trump means what he says when he tweets? Yeah, I mean, to some degree, I do think that he rolls back a lot of what he says. I think that he could be exaggeratory sometimes, and he uses it as a tactic to get what he wants. Whether or not that works, it's seemingly worked out since Liberation Day so far. But yeah, like doing deals with Europe and Japan, and he's getting these massive amounts of capital to come in and be spent at his will, and they're completely one-sided, and there's no tariffs in one direction and tariffs in the other. Like, you have to give some credit where credit's due. That's what he wanted. That's what they ended up getting. Yeah. Because the milkman Steve loves it so much, let's add Salesforce to the community fund. Payush, absolutely will do. We'll put that in the fund for sure. Let me take a sip of coffee. Oh my gosh. So good. So good and tasty. Tanner, will you buy Okta with this? Absolutely. Also, when is S&P 500 adding a new company? August 7th, I think, is whenever they will have a company that ends up getting acquired and then replaced with a new business. But then we'll also have a full rebalancing, not full, like they're not going to go in and change every single business, but where they actually look over the changes that they need to that need to be made at the end of September. Okay, so they do one every quarter. Yeah, we'll buy CRM and Okta with that. Thank you guys for the donations. I do appreciate it. Coffee this late will ruin your sleep score? I doubt it. Dude, it's never affected my sleep score. I haven't had a sleep score less than 90 in forever, and you guys have watched me pound coffee at like 11, so I'll be okay. I'll be okay. PayPal stock is getting to April lows. Yeah, it's not quite that low, but it is low. I mean, come on. This is just incredible here. Like the drop off on their price to earnings is just insane. Forward PE of 12 times. Now, was it as low as what we saw in April? No, but there's not this many times that you can end up purchasing this business this low. That's incredible. These are lows that you haven't seen since December of 2023. Well, aside from April, December of 2023. So, and also, I'm not purchasing it right now. It's 67, but the comment was if it gets to 58.60, yeah, I'll definitely be a buyer. So, if the market continues to drag that down, I don't know. How long can you ignore? Like, payments is such a weird space right now. The whole market hates it. They even disrespect Adyen to some degree. I want to take a look at dLocal. They're one of these insanely fast-growing businesses, and the price that the market is putting on them right now is just insane. The valuation's nuts. So yeah. Tanner, when you reach the age of Tevis the Grey, PM coffee drinking will kick your butt. That is so funny. How much boost if SoFi gets into the S&P? So they're not eligible right now because they haven't been above 22.7 billion market cap for 3 months. I think it's 3. It's 3 or 2. I think it's 3. Whenever they are, they will be eligible. And I do think that we'll get in pretty soon after that. I bet it's like a 20% bump. I think it's such an added validation to the company. People realize that it'll even be better for customers, for brand awareness, for all of these things. For institutions that want to even talk about the loan platform business. You're dealing with an S&P 500 company. This is not some small cap. This is one of the largest American institutions in the world. That institutions look at that very favorably. If people look at Trade Desk and look at Datadog and say, these companies' brands will be better off because institutions will trust an S&P 500 name. You have to guarantee that that's the case for SoFi as well. Block has not done well since they've been added. Yeah, because they're not good. They're not a good business. I don't know what to say. Here, let's go to Block real quick and check out Dish Business. When do they show off earnings? When do they show off earnings? Oh, July 21st? No. Sorry. Earnings, XYZ. August 7th. Okay. Sounds good. August 7th, we'll probably listen into that call or I'll read it at least. And then, yeah, but if I go ahead and take a look at their segment KPIs, let's see if we have user data here. Now I'll have to take a look at their actual thing, but it's been stuck at like 57 million, I think. Trailing 12 months on Cash App revenue is actually lower than December 2024. It's just not growing that fast. Yeah. Like transaction-based revenue used to grow at 45%. Last 12 months, it's grown 1%. Hardware revenue down. That used to grow by 56% back in December of 21. It's now down 3%. Yeah. Just not too happy with the business. Palantir, I don't think will miss. It's just whether or not you think that what they're going to show up will be large enough to justify how large the stock has actually moved. What did Amazon close out the day at? Down 8%, 214.75. You gotta love it. There definitely is buying opportunities in the market. Now, will it end up opening even lower? That's what everyone has on their mind. But we have a weekend to decide on what we want to do. Jack is weird. No, honestly, I think Jack Dorsey is a good CEO that I would be happy to be a part of. He's just too creative for his own good. Like, he wants to continuously work on these new ideas and I think he's just a technologist in general. But sometimes whenever you're holding or running a large organization like that, sometimes margins are more important than just making like spending your money on a WhatsApp competitor that uses Bluetooth. I just think let a smaller company try to do that. You're already having and that's something that Meta does whenever every single business is firing on all cylinders. Not whenever your Square business is not growing as fast as people want. Cash App's kind of failing. And then you go out and do another project whenever your current projects are not running themselves. Amazon is an easy 30%. Yeah, Amazon, it will be such an easy pick. Everyone seems to forget where they are for cloud, where they are for AI, robotics. They have everything. All the wind is on their sails. All of it. Have they been as good as executing as Microsoft in terms of setting up new data centers and actually being able to, supply the capacity needed or getting up capacity that's needed to supply the demand that they're seeing? Not so much. But, the sell-off today is like, oh my gosh, death to Amazon. It's just not going to happen. It's not going to happen. There's too many things going in their favor. XYZ needs to focus more on blockchain innovation. Maybe. I think it's more of just a marketing thing, but better products for higher, like more affluent customers. Jack is the next McAfee. I don't think so, but I have a theory that Nubank will double this time around next year. What do you think? Do I think that a price, like, what does it fall into today? Are we in the 11s? $12.05, $24 next year. It's possible with a good macro, that's for sure. If they get a good macro, good dollar, yeah. And by good dollar, I mean bad US dollar, good Brazilian real dollar. Well, Brazilian reals. The dollar there is redundant. They also have a good portion of Rivian if that works out. I'm not really betting on, Amazon for that part. I think Kuiper's going to do really well. I think Cloud's going to do really well. Amazon.com continues to make there'll be no slowdown of large companies that want to deal with them, whether that's in healthcare or new drug applications, car sales or new house product. Like, it'll just continue to expand. Buy some Rick stock going into the fund. Absolutely, Chip Diamond will buy some Rick hospitalities. Is it hospitalities? Leisure? What is it? RCI Hospitality, yeah. Will do. Thank you, Chip. I do appreciate the donations. Very kind of you. Do you think Figma will take off like Circle or pull back like SoFi before rebounding? I think that Figma is so unbelievably overpriced here. It's insane. All you have to do is just think about it from this perspective. At least this is the way that I think about it. They agreed to be acquired by Adobe at $20 billion. This was not long ago. Okay? So much so that they literally went public at a $20 billion valuation like yesterday. And then in one day, they've gone up 300+%. What? Like, that's like the compensation package for the CEO over the next decade for Filled. Yeah, I know what Rick is, Evan. I know it's a strip club or a series of strip clubs. But the truth is that what I do think is going to happen from the Figma release is that the IPO markets are going to get hot. Like, every large business is going to look at that and say, oh my gosh, how do we get our stock up 300%? Like the market is well oversubscribing IPOs. This would be a good time to file. That's pretty interesting. People that just bet on a stock going up or down, I hope it works out for you. Honestly do, but it's not a strength of mine. So I do actually think it has to tank. But yeah. See, this is how I know that Drago's here that's saying all in on this stock and everything. Andrew will open at 500 literally means nothing. You're not even saying a market cap. You're not saying the amount of shares. 500 means nothing. So, I don't know how to value a company that opens at 500. Is that a lot or is that little? Because if you're Mercado Libre, that's little. If it's Berkshire Hathaway, 500 is tiny. If you're talking about, Chime, 500 would be a lot. 500 market cap. Yeah, I'll buy the whole business. I don't think OpenAI is going to IPO, but like that would be a company I'd take significant price in. I just saw them raise another round at 300 billion. I would put like 10% of my portfolio in it. More maybe. I would love if OpenAI went public. Love. Do you ever buy any Leap options? No, I'm a share guy, and then writing covered calls on those shares. 50 base point cut coming in September. I mean, we could see it. They might start off with 25 and then get into a 50 later on. But yeah. OpenAI will go public at 1 trillion. It's definitely a possibility. It's just when. Do they go public for a $1 trillion market cap in, like, what would that place it at? 2028, 29, somewhere around there? I could see that happening. We should get paper gains on here, see if he gets you into options at all. I mean, many have tried, many have failed. I'm just not good with timing things. And the reason why I still think that I'm a good investor is that I have an iron stomach for volatility. I don't get scared. Days like today, I just I haven't felt much. I mean, it's fine. But options put pressure and additional anxiety and additional upside, obviously. But I don't think that I would be very good at that. What I like to do is try to determine if a company is misunderstood and see if there's value in that, and then make large bets there. Anyway, when traveling, why limit yourself to a hotel room, an R&R community fund for Airbnb? Payush, you're speaking my language. I will definitely put Airbnb into the fund. Tanner got a show and a room. You write covered calls on that's one way of spelling right. You write covered calls on Mercado Libre. I don't sell covered calls on Mercado Libre. No, that's an expensive option for sure. But no, I don't sell on Mercado Libre. I don't even do it on Nubank either. Just not a whole lot of volume at all. But I like Robinhood's, SoFi's, Nvidia's for sure. Yeah. Evan, what are you referring to? Big earnings tomorrow. Am I crazy? This sounds like a setup for a joke or something. Happy Red Friday to everyone. Yeah. Oh, cool. Nice. I didn't even know that. Little Berkshire report. That's fun. Cash pile update. Yeah. Yeah. I bet it grows. I bet it grows. I don't think he's buying dips here. I think from what I heard that they want to continue to stack cash. So then they don't have to worry about going to banks or getting additional funding. They're going to just be their own cash stack. And I don't necessarily think that they will get completely invested or even near completely invested ever again. So Berkshire takes a position in SoFi. Book it. I would bet against that, but yeah. I mean, there might be some changes in his stuff. Maybe there's a purchase for energy plays, stuff like that. Like that's really what I foresee him doing. But I still think that the cash stack grows. All right. Let's get back to some news. Evan actually updating us on some news here. In terms of the spend that big tech is actually doing, this I think is such an amazing chart that Evan at Stock Market News in chat, same guy, said big tech is now on pace to spend more than $400 billion per year on capital expenditures as the AI arms race heats up. Just look at this. Isn't that freaking insane? Okay, and then how is this going to look like over the next, multiple, well, I was going to say multiple years, but let's just even shorten that. What that looks like over the next 6 quarters. They've all said that they're going to accelerate capital expenditures into 2026. We know that, Microsoft's going to spend a crap ton next quarter. There's just going to be a lot of spend. Where does that go? A lot of infrastructure plays, energy potentially, but mainly the ones that I like to focus on. The 3 that I think everyone focuses on is Broadcom, AMD, NVIDIA. NVIDIA for me, baby. So that I'm very, very excited about. Google is another one that I'm going to continue to keep an eye on. I think that this is going to be one of the most largest turnaround plays. Not like some people have put it to oh, this is their meta. I don't think they're sold off nearly enough to consider this a meta type turnaround, but it is going to be a very exciting time for Google. I think that they are going to survive and thrive in these times that Roy, for example, is going to bet against. Stoked. I think Buffett might follow Tom Lee into BMNR. Yeah. I'm sure he loves Ethereum staking. He might like Ethereum staking a lot more actually than Bitcoin. He might be more into the Ethereum plays because there is actual yield. But yeah, I'm getting very excited for Google. I think that the models, the products that they're putting out, the way they cross-sell that into sort of the Google, the enterprise level at Google Cloud, and then the speed at which they're expanding Google Cloud is just very exciting. Let's actually bring up one more tweet from the great and powerful Evan in chat, where he actually brought up a all hands meeting that Sundar Pichai actually had, where he said, anytime you go through a period of extraordinary investment, you respond by adding a lot of headcount, right? But in this moment of AI, I think we have to accomplish more by taking advantage of this transition to drive higher productivity. Maybe not good for non-farm payrolls, but definitely good for margins. But that is really what we expect to see into the future is a large increase in productivity and a larger use case for artificial intelligence, which gets me extremely bullish on companies that are ahead in the LLM space. Meta, Google, what's the one? OpenAI, that's why I want to take a big stake in them. And maybe one day, Apple. Apple does seem to be getting their crap together. Now, I'm not going to be purchasing Apple, but I would like them to be purchasing some GB300 NVL72 systems. That would be quite fun, huh? It's not like they're, they don't have Jensen Huang's number. They've purchased $1 billion worth of chips this year, but we want to see them really ramp up capex. But really what I think it'll be is an acquisition in some sort of second layer company. Even that's fine, because if they ramp up demand, that demand's tapping some cloud, then the cloud will end up having to buy the chips from NVIDIA regardless. So as long as more customers are tapping into artificial intelligence, there'll be more token generation. Token generation is the lifeblood of artificial intelligence. And that's what NVIDIA systems are there to create. So, yeah. Do you think that some AIs will have their own YouTube channels and start running shows like this one? So YouTube actually made a change to their monetization recently, where if you are creating artificial intelligence content, that you cannot monetize it. So there will be, and there already is, there are like artificial intelligence streams and stuff like this, or AI streams. But I don't know if there will be a whole lot of spend towards that because it won't really be looked at as a business opportunity going forward. But yeah, maybe they will, oh, ladies and gentlemen, Steven, I'm live.
Why are you live?
Same question every time, because I'm a live streamer. I stream. I talk stocks.
Okay, well, you're a good role model. What time tonight?
For the Fintech Friday, 10 o'clock.
All right, I'll see you then.
Do you want to come on now?
I'm in the middle of writing something about a little company called PayPal.
I was just talking about them. They look cheap.
They look disgustingly cheap.
Yeah.
And I'm putting Alex Chris on blast.
In a good way or a bad way?
No, I'm going to actually find his email address, send him an email. I'm going to send investor relations an email. They need to stop with the buybacks.
You want a dividend?
So I guess I'll come on for 5 minutes and run you through the math.
Okay. See you.
Send me a link.
Yeah, see you in a second. All right. Let's get a PayPal lesson from the great and powerful. Yeah, it would be a name that I'd want to get back into if I think that they can't stay cheap they can stay cheap forever. The markets can stay irrational longer than I can stay solvent. But I think that who is Steve? Steven Fiorillo is one of the top Seeking Alpha analysts. He's like a retail analyst that covers a very wide range of companies. He's very fundamental and qualitatively based, similar to myself. Loves jumping into the spreadsheets and the numbers. Has strong opinions and sometimes strong language. So I do apologize if he swears the second he comes onto the show. But Steve is coming. If you see comments about the milkman, it's referring to the same man. PayPal, no. Yeah, I mean, if they're growing and they're buying back stock, there's only so cheap you can make them. Steven. Hello?
Hey.
Hey. What's up?
Nothing. Give me 1 sec.
No problem. We are live. We're just all waiting for you.
So, yeah, the numbers look ridiculously cheap. And I'm annoyed because this is a stock that in 2021 to 2022 went from 225 to 300. And since, when was it? The beginning of 2021, they have repurchased $23.9 billion worth of shares.
Yeah.
So they've allocated just about $24 billion to buybacks in the past 4 years. And all that we've seen is a fraction of the price. Buybacks are supposed to create shareholder value because it's more tax efficient than a dividend, takes shares off the table, and makes the remaining shares represent a larger piece of revenue and EPS. And that's what a buyback is supposed to do. If you have 100 shares of a company and you have 10 shares, and then you buy back 10 shares, and there's 90 now, you have more shares, your shares represent more ownership. So if EPS stays the same, it represents more. Obviously, this is not working and the market doesn't care, and shares have flatlined. If you want to bring up a 5-year chart, I mean, shares have legitimately flatlined for 3 years at this point. So what I'm going to say is the market doesn't get excited about PayPal's buybacks, doesn't care. So let's change the narrative. And the narrative should be, we're going to do 6 to 7 billion a year in free cash flow, because that's what they said. They used 977 million shares in their GAAP numbers for the formula. So we're going to say the current float is 977, because I don't know how many shares they bought back this quarter already. Now, when I look at this and I run the numbers, if we say on the low end 6 billion, because they said they're going to use 6 billion for buybacks, if they use 3.5 billion for a dividend, and then the other 2.5 to continue the buyback program, do you know what the yield would be on that dividend?
A lot.
5.3%.
Yeah.
Now,
Yeah.
if they went gangbusters and did 4 billion on the dividend and 2 billion on buybacks, you'd have a 6.1% dividend yield. You cannot convince me, and nobody can convince me, if PayPal came out with a dividend yield of 5 to 6%, that it wouldn't be headline news and it wouldn't get investors excited. Not to mention, long-term shareholders that have seen value destruction would actually get a real benefit that they can feel with a 5 to 6% dividend check coming in every year.
Isn't that insane, dude? Look at this buyback yield.
It's huge.
10%, bro.
It's huge. And normally that would be a great thing, but it hasn't done anything for the company. So why should we assume it's going to do anything in the future?
I think that is, it's a mistake to assume that it's done nothing.
It's done nothing for them.
Yeah, but
What
if they weren't doing it? What if the stock, like you're not
Well, that's
assuming
what I
that we
was
wouldn't
gonna
be
say.
at 45?
All that it's done is help them manufacture more EPS and help them beat estimates.
Yeah, but
That's all it's done.
we could be a lot lower without these buybacks.
Maybe,
You know?
but at this point, we are where we are. There's not a lot of shares left. At this point, they're going to be a private company in 13 years. So why even do this degree anymore? If they did, think about this, if they did 6 billion in dividend, 9.2% yield. So give the shareholders something they can feel. Do a 4 bill, 2 bill split, or a 3.5, 2.5 split on free cash flow between dividend and buyback. Favor the dividend. Open it up to new ETFs. You'll get a whole nother investment class of shareholders buying it. You'll increase the volume and you'll create real value for shareholders. I mean, I'm not in it right now. You get a 5% dividend on that, I'm back in a second.
Yeah, I mean, I would still keep up the buybacks. I do think that starting a small dividend, even if it's, going for a 1% yield, 1.5% yield, people will be interested.
That's not worth doing it. Nobody will do it. Nobody will buy it.
Well,
Because you can go buy Salesforce, Cisco, IBM, any of those companies for a larger one, or you can go buy Alphabet, Meta, Apple, or Microsoft for a dividend also.
What I like about dividends is that if they cut the dividend, it's not as drastic of a change as cutting if they cut a buyback, it's not as drastic as cutting a dividend.
I get that, but you could start the dividend at 3.5 billion, and you can start to become a dividend growth company and start it at 5%. Because you start at a 5.3% yield, you blow everybody else out of the water. It's headline news, and it's a must-have dividend stock, especially in a lower rate environment where you have $7.4 trillion sitting on the sideline. That's going to be looking for yield.
Yeah, I am surprised that they haven't dabbled in a dividend, because then it gets you into new funds as well, right? Like there would
That's
be
my big thing. Think about all the dividend ETFs that put you in.
so many. So
So many.
yeah.
People underestimate that.
I wonder how much what the rate of companies that are tracking dividend. It must be over $1 trillion.
Oh, it's got to be. I mean, I'll bring up on my thing. I'll just type in some ones off the top of my head. Like VYM is Vanguard's normal dividend fund for their high dividend yield, no options or anything.
Yeah.
75 billion assets under management. SCHD is Schwab's. That's got 69 billion. So between the two of those, you got $140 billion worth
Yeah.
of AUM there.
And
Just between the two of those.
they would pick up PayPal day one.
Day one.
Day one.
Day one. And then, not to mention, you got all the mechanical funds like JEPI. I mean, JEPI's got almost 41 billion in AUM right now.
I got some JEPI.
So even people like you have JEPI. So I mean, you know, there's so many dividend funds out there that even I don't know. It's really incredible that they haven't done this yet. Even if they just did 1.5 billion to start, like you said, 2.3% dividend to start, and you still got 4.5 billion for buybacks.
What about the rest of the numbers, though? Are you going, like, you're writing an article here? What else are you seeing?
Look, the market's freaking out, in my opinion, because total payment volume and payment transactions decreased year over year. I think that's why the market's freaking out. I don't care about that. I care about forget the actual metrics behind everything. I care about their profitability and their revenue. Their revenue, everybody's been saying this is a dead company for years. Dead companies don't grow. And this company continues to grow its freaking revenue. And since this Q2 2022, its quarterly revenue in Q2 has increased by 22%. Like, this is not a dead company.
This is their payment volume, quarter over quarter. This is not dying at all.
Well, in their deck, it said that it decreased.
Maybe the growth rate decreased.
Okay, growth rate decreased.
But yeah, I know Braintree is not doing as well as people want. That was my understanding.
Yeah, payment transactions decreased 5%.
Yeah, okay, number of payment transactions,
And
sure.
total payment volume
Did not.
did not. It increased by 6%.
Yeah, we're on the same page.
Yeah. I mean, look, I think people are looking at the payment transactions and they're worried. But I mean, I'm not worried about that. I'm really not. I think it was a good quarter. They raised guidance, double beat. I mean, I just don't think it deserves to sell off. And I think that they need to make a statement, and the statement's with the dividend. I just think it's going to do more for shareholders to have a dividend than these buybacks at this point.
I mean, clearly they have to try something new. But if we continue to see red, like someone in chat said, hey, would you pick up PayPal if it went back to 60 or like 58? I'm like, yeah, definitely. Like 58. Like, although I make some jokes, we actually did make money buying in the 50s before.
Yeah.
Like, you know.
How about this? Apple should just acquire PayPal.
For real.
For real. Like, Amit and I were talking about what Apple should do. Apple should take $100 billion. They should go buy PayPal, Perplexity, MSG Group, and Warner Brothers Media.
Yeah. Yeah, I think Sagig says a good comment here. It's just without a dividend, they're just not as attractive as a growth company or an AI company.
Correct.
So yeah, that's the problem too with positioning, right? Is because Alex Chris keeps calling them a growth business, which I actually do think revenue is going to accelerate. Once the Braintree comps sort of roll off, I think that you will actually see them start to re-accelerate in their growth. Venmo is doing so well, dude.
That, though. Everybody's thinking of a growth company about Robinhood growth numbers or Palantir growth numbers. PayPal's not getting to 30 to 40% revenue growth year over year in a quarter.
No, but they could get to 12%.
Sure, but the market's not going to get excited about that.
Not without a dividend, but a dividend company growing at 12%, yes. Good margins, high dividend, high buybacks. That is exciting. I mean, yeah, I don't know. I don't know. It
And
is a
for
name that I got to
people
look
who
at.
want to be in PayPal for the long term because they believe in it, now they can just reinvest the dividend and get an even bigger position. And when you think about sharing in the profits, a dividend is much better than a buyback, especially in this situation, because is anybody really sharing in the profits? You've had tens of billions of dollars go down the drain at this point. At least with a dividend, it's going into our pockets.
Yeah. I don't know. I'm not as mad with the buybacks. I think the stock would be lower without it. And at this 10% buyback rate, there's only so long that investors have to wait for in order to guarantee a return. You know?
Well, think about how long they've been waiting so far. I mean, this company's trading at less than 12 times free cash flow. It's disgusting. It's trading like a tobacco company. Oh, I'm sorry. Philip Morris has a higher valuation.
Yeah. Yeah.
Just saying, like tobacco companies have a higher valuation than PayPal. So
Yeah. No, you're right. You're right. So what are you doing?
I'm halfway done with the PayPal article. I'm gonna do my PayPal analysis, my Apple analysis, and my Amazon analysis this weekend.
So you haven't taken a look at Apple or Amazon yet?
Oh, I took a look at it. I hope Amazon goes to like 180 so I can buy a lot.
So initial thoughts on both of those.
Apple blew it out of the water, and I think Amazon's was phenomenal. And people are freaking out over AWS because of how good Azure and Google Cloud was. And
Yeah.
I'm not worried whatsoever with AWS. And I think the street's overreacting. And if it sells off even more, I think it's screaming buy.
Do you think that Apple will be the largest company in the world again at some point?
It could. I mean, I think it's got some work to do. I mean, it's going to be hard for them to. Here's the problem. If this was last year and this was happening, I'd say yes. Here's the difference with this year. NVIDIA may generate more net income than Apple this year. So if that happens, it's going to be a really hard sell in my mind to say Apple should be more valued higher than NVIDIA, because we know NVIDIA is going to grow much more than Apple next year. And if NVIDIA is doing more net income this year or more growth, no, Apple should not be bigger than NVIDIA.
Yeah. Yeah, they've got a lot of climbing to go to even catch up to where Nvidia is right now.
Yeah, they
Let
need
alone
to do two things. They need to focus on AI, and they need to fortify their profitability. Acquiring PayPal, they could probably acquire PayPal for less than $100 billion at this point, because they have basically no debt on the balance sheet, PayPal. So if they were able to get PayPal at 80 billion and they're doing 6 to 7 billion a year in free cash flow, it's immediately accretive, and they'll make the initial transaction back in 11 to 12 years from the free cash flow, integrate it right into freaking Apple Pay. It's a bolt-on acquisition. It makes sense. And then buy Perplexity for the AI, go buy MSG Group for the Rangers and the Knicks and put them right on Apple TV, take them off public networks.
so big spend into big growth.
It's a year to year and a half of buybacks. Who cares?
Yeah.
And it's just, and they have all the cash on the balance sheet too. They could still do their crazy buybacks and just use the cash on the balance sheet for this, or go to tap the debt markets and just pay it back because their free cash flow is so high.
Any other comments you want to make before I let you go?
What time SoFi?
Well, other we'll be talking Hood, SoFi, a bunch of fintechs. 10 p.m.
10 p.m.
10 p.m. New York time, just for
10
you.
10 p.m. Surprised you didn't go to come to New York.
It's just a lot for one conference.
Dude, you're not even going across the continent. You're going like, how long is the plane ride? 45 minutes to an hour?
I think like an hour and a half.
Yeah, hour and a half. It's not hard.
Yeah, I think it's an hour and a half.
It's not
We
hard.
all can't fly private like you, Steve.
I don't fly private.
I was just making a joke.
I don't fly. I don't go anywhere.
He does not go anywhere.
I do not go anywhere. Why do I live in the greatest city in the world. Why do I have to go anywhere?
Heck yeah. I like it.
People come to New York. New York doesn't go with people.
So did you guys do a dinner and everything? Like I assume that you guys all met up.
No, I didn't. Amit was doing Amit things.
Amit doing Amit things.
Yeah.
All right. I'll have to ask him about it. All right, man. Thank you.
All right, keep being a good role model.
You too, brother.
All right, later.
Peace. They honk when they're happy in New York. He's the freaking best. Honestly, I love Steve. Let's see what other news we potentially have. If not, maybe we will leave some things for the next show tonight, which is at 10 p.m. Eastern Standard Time. Hopefully you guys enjoyed the videos on SoFi's little update. It was only like a 6-minute long video. If you guys like those types of videos, I can do a lot more of them. Or if you guys like the more structured 15-minute long, 20-minute long breakdowns of multiple companies that I like and their valuations and, you know, how well they did, I can also do that. But finding what you guys like is a balance I have to strike. Who's all going to be at the show? Roy, Tevis, Steve, myself. I think that's the list. Sorry, 10 p.m. Eastern Standard Time. New York time for him. Mix of both. Yeah. I think you mean JMP. Yeah, it was a private meeting that I think Kyle was referencing. The events page on SoFi was what people should reference. Anyway, ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But until next time, I'm out of here. Thanks for watching. Subscribe down below. Hit the notification bell. Do all that good jazz. Bye for now.